Great. Good morning, good afternoon, and good evening. My name is Diana, and I'm the head of research and sustainability at the Global Blockchain Business Council. It's my pleasure to welcome you to GBBC's Virtual Members Forum on Lessons Learned from Traditional Finance for Regulation of Digital Assets, a bi-weekly webinar showcasing the innovative work of our members around the world. Today, we are joined by Brock Arnason, founder and CEO of Droit. GBBC member Droit is a technology firm at the forefront of computational law and regulation within finance and other domains. Founded in 2012, Droit counts many of the largest financial institutions as its clients. Its patented platform, Adept, provides an implementation of regulatory rules reflecting industry consensus. The Adept platform processes tens of millions of inquiries a day, deciding in real time which interactions are legally permissible across the globe. Just briefly, before we begin, I would like to introduce you to Brock. Prior to founding Droit, Brock was an executive director of fixed income e-commerce at Morgan Stanley. He was the global head of product for Matrix, Morgan Stanley's client portal, and led swap execution facility strategy and Dodd-Frank compliance programs across the institutional securities group. Prior to Morgan Stanley, Brock worked at UBS as a technology leader for credit and interest rate derivatives. Brock holds a Master's of Engineering and a Bachelor of Science in Engineering Physics from Cornell University and an MBA from the University of Chicago. We welcome your questions at any point during today's presentation, so please submit them in the Q&A tab at the bottom of your Zoom screen, and we will take them after the presentation. So thank you, Brock, for joining us, and I will now hand things over to you to begin.
Thank you for the kind introduction, Diana. I am going to quickly get my presentation up and shared, if you'll give me one moment. Great. So the topic of this presentation is lessons from traditional finance for the regulation of digital assets. The flow, I will talk a little bit about Droit, who we are, what it is that we do, the nature of our platform, and then I'll talk about how we think about digital assets and why this space is so interesting to us. So to start with, Droit is a company that sits at the intersection of computational law and regulatory compliance. Specifically, the majority of our business is in the capital market space for transactional compliance, but we have a variety of products and we're continually expanding into new areas. We're pioneers in computational law and automating decision-making, and we see the complexity of the environment in which firms have to operate, the complexity of that rule and regulatory space as an opportunity. It's an opportunity for better action and an opportunity for us to provide value to our clients. Institutions make millions of complex decisions every day, and those decisions take a number of different forms. They relate to internal policies, to rule books that may govern market infrastructure, to regulations under which they bear a number of different obligations for compliance. And what we've seen is a pretty broad dispersion in how firms approach solving these problems. But by default, whenever there is a particular problem that needs to be solved, it tends to be solved in a vertical silo. It may affect multiple divisions of a firm, but they will often recreate the wheel and implement that same solution in different ways, in inconsistent ways. And visibility into the entirety of how certain decisions are arrived at can be very complex and difficult. So we aim to streamline this process. Droit is the smart way to act right with confidence, meaning we provide a platform that one can use to systematically address decision-making in an auditable and transparent manner. Who are we? So as a brief snapshot of what the firm looks like, we have about 100 employees across 4 different regions. We are primarily based in New York and London, but we also have cadet branches in Singapore and Sydney. The world's leading financial institutions rely on Droit. This is just a sample of some of the institutions who are our client base. But we are very firmly in the business of helping those institutions comply with the regulations they're subject to and implement the policies that they have constructed. We do this with a platform called Adept. I'm going to speak a little bit to the advantages of Adept and what it is that specifically Adept enables our clients to do. And you'll have to bear with me as I go through some of the details, because I think it's important to get a good picture of the process from front to back. So Adept is a platform for automating global compliance and real-time systems. It simplifies decision-making in a complex landscape. And Adept is a good solution whenever the following conditions apply. When you have a complex decision space requiring high performance, that is to say, many decisions made in a short period of time with low latency, and it is a heavily regulated and audited space. So the solution provides automation that is intelligent and a repeatable decision process that is transparent and visible, and indeed gives people transparency to the actual source regulation and law that drives the decision-making process. So there are three components to what we call the Adept platform, but let me start at the very beginning. If you imagine that you have a problem of implementing or operationalizing the law, where do you start? Well, you start with a process for defining the space that you're operating in and where you observe the law. So for us, this can take the form of regulatory rulemaking, internal policies such as sanctions, restricted lists, trader entity mandates, can take the form of market microstructure rules, like what products are eligible for clearing at a CCP, what can you trade on a particular execution venue, and we normalize those into a standard representation. So you observe, you normalize into a standard representation, and you create files or data that represents the digital text that drives your decision-making process. That digital text is consumed by a component we call the annotator or the digital library, depending on context. And that component allows you to see a taxonomized view of regulation, to compare versions of the regulation, to search it, and to see annotated metadata that we attach to that regulatory text. That is one component. So we deliver that to our clients as a web app that gives them that visibility. And we send updates when we observe change as new digital text files. The second component to this is the logic viewer, which is another application. That logic viewer renders visible and legible a decision model. Now, when you operationalize the law, you need to create a representation of that law in a way that is codified and that you can interpret and execute and you can validate. So we do this by formalizing it in a first order logic representation. But the important thing to keep in mind is that we create files that represent that logic. And we have a team called the knowledge engineering team that actually builds these knowledge models. So you start with the digital text, you observe that change, you build a knowledge representation as math, and that becomes its own version data. The logic viewer lets you open that logic representation and see a decision tree. And you can look and step through how you would arrive at certain decisions to determine whether you are in scope for a particular regulation, whether you're out of scope, and if you are in scope, what obligations are created and who bears them. The very interesting part of what we do at this point is provide a correlation between that logic model and the underlying digital text. We do this through annotations of the digital text. So, for example, if you were looking at a decision tree and you see an individual node and you want to know why that node exists, let's say it is interpreting a component of MiFIR where you are in scope for the MiFIR reporting regulation unless a certain exception is met. And you say, why does this exception exist? You can then traverse from that node in the logic viewer and jump to the pin site in the underlying text, the paragraph of that legislation from which that decision is derived. So in this way, we build an annotated set of digital text that is correlated to a decision model, and we present this to our clients, and our clients are able to reassure themselves that the decision model they're looking at is complete and correct vis-a-vis the text, because they can start with the decision model, they can tick and tie the individual components to the pin sites of the underlying law, or they can actually take an SME, give them access to the digital text, and they can look at each of the individual annotations and see where we are referring to those annotations in our logic. So these two pieces together give our clients access to updated decision models that reflect an evolving regulatory space. And because of the nature of our clients, indeed reflect a market consensus view of that law. The third piece, and another very important component of this, is actually evaluating these logical models. So we do this via a decision engine exposed in a API, a web service. And that decision service takes as input a set of facts that describe a situation. In the case of a transaction, they will describe a prospective transaction or an executed transaction. You can request the evaluation of a set of laws or a set of rules, and then say, here are the circumstances that relate to this particular trade. Please tell me what I should do and what I'm subject to. And it will return back, you're in scope for these particular rules, you're out of scope for these particular rules. Here are the reasons why, here are the obligations and who bears them. And then it attaches a proof. That proof is an audit record that our clients store. But at any time in the future, you can take that audit record and you can visualize it in the logic viewer. It will open the version of the law that applied at the time, the logic model and traceability to the actual law. It will show you the path that was traversed in that decision model to arrive at that decision. And the power of this is when you are audited. For an internal audit or a regulatory audit, if someone comes to you and says, 5 years ago, you didn't clear these 3 trades, can you please explain why? We think you should have. You can instantly pull up that audit record. You can see the decision process. You have a record that you can show, given the facts at the time, the law at the time, I made this decision and this is why. And that's a very powerful tool in responding to those types of inquiry. So to reiterate, what do we do for our clients? We monitor the law, and the law, again, is the actual law, market, microstructure, or infrastructure rule books, and internal policy. We build a consensus interpretation and logic model for that. We update our clients with that logic model. And when they license our product, they are licensing a solution for a defined set of space, regulatory space, or a problem space that we are providing this continuous update and subscription for. So when we talk about products that are built on the foundation of our Adept platform, we have products that address different use cases that are different slices of that regulatory space. So within reporting writ large, this is the case of trades that have already taken place. This is a post-trade activity. We're looking at transaction reporting, things like determining CFTC, Part 45 reporting, MiFID, MiFIR, EMIR reporting, various APAC regimes, et cetera, and determining who has to report, when they have to report, and indeed we can generate a shippable report for our clients. When we talk about obligation and control mapping, we're really talking about facilitating the evidencing of the full process of responding to change. Because we can identify specific regulatory change and the implication of that change to a data model, we can communicate that to our clients in a way that they can tie together their internal processes for what systems they have to change and what steps they have to take to adapt to that. So the obligation and control mapping is a piece of functionality that we start with reporting, but really for all adept use cases can provide that full evidentiary chain. For position reporting, this is something that there will be a press release in the not too distant future on. This is an explicit industry consortium-led effort where there is a very targeted effort to build consensus around best practice and implementation across many different regulatory regimes for this particular space. That is a very interesting effort, and it's one that is a model that we plan to extend. On the pre-trade space, point of trade decision-making is basically you get to the point of executing a transaction and you say, based on the world's set of laws and what might apply to this trade, based on the entirety of my internal policy, what these market infrastructure venues can do, roll all of that up to me and tell me, can I trade or not? And if I can't, what are the reasons why, right? So that use case is a powerful one of our biggest products. Client readiness exists even before that point. Client readiness is giving someone in the front office the tools to answer the question based on what I know about the client, based on the prospective product that I wish to trade with this client. Is that possible? And if not, why not? So before you even have a trade in hand, show me the possibility space of what I can do. And finally, a recently launched product for us on the wealth side starts with cross-border decision-making, but extends far beyond that into product suitability and other forms of policy. And it's really answering analogous questions in the wealth space that we answer in the capital market space. So what are the dimensions or the envelope of the conversation that I can have with this client as a wealth advisor? Can I market from this country into this country for this product space or not? These types of questions. So now I think it is incumbent on me to answer the question, what do we plan to do in digital assets? How do we think about that? What does that mean for Droit, and what role could we play here? So I think that we should start with an observation, and that observation is that the world of digital assets today looks an awful lot like the world of OTC derivatives just over a decade ago. It's an evolving regulatory space. There have been a number of high-profile scandals, and there is a certain intensity of regulation that is coming to this space. Many people think that the types of regulation that are going to be demanded and the scrutiny that will be applied will make the market, shall we say, unprofitable to participate in, right? Many of these same concerns were raised for OTC derivatives trading when Dodd-Frank was defined, when MiFID/MiFIR was defined. So we expect there will be significant regulatory change, that this will impact existing market participants. It will also impact banking capital markets firms, fintechs. There's going to be a lot of challenges, there will be risks, but there are also opportunities and there are lessons to be learned from the way that regulators think about entering a new space for regulation. So what are some of the dimensions of that regulation? So I'll pause for just a moment and reflect on the principles that were applied in what's called the G20 consensus post-financial crisis. So the first thing that regulators wanted to see was increased transparency on the positions that people held, who was trading what, where were they trading it, right? Because regulators realized that they had no idea in the OTC derivative space in the financial crisis. So they required and created a number of mandates and guidelines and principles for how that information would be disclosed on a regular basis to regulators. Many of the same principles are going to apply for digital assets. Now, many people would say in this space, the chain provides a canonical observable record of exactly what was transacted. And that is true for settlement transactions, but that's not the level of detail that regulators will require. So we believe that there will be more stringent reporting requirements, that many of those reporting requirements will fall on market participants and they will take place at a level above the chain. Risk and control policies. Regulators want to make sure that there is prudential risk management for market participants. This takes the form of AML and KYC controls, where those are quote unquote bad actor controls. Knowing your client will also help you understand whether certain things are appropriate for the client, but it also means risk management and the policies around that. So there will be activity in this space. Investor protection is a very broad term, but again, also applies to protecting smaller investors who are market participants. And in the case of derivatives law, this ends up taking the form of what I would characterize as price transparency, disclosure of risks, acknowledgement of risks, and the application of what is called suitability and appropriateness checks. So in some contexts, this is known as business conduct rules. In other contexts, this is known as best execution or pre-trade transparency. But all of these are aspects of making sure that the marketplace is fair, that risks are disclosed, and that retail investors aren't being taken advantage of. So many of those same principles, again, will apply to digital assets. Now, there are some unique elements in the digital asset space. So stable coins clearly are going to be a focus area, not just in thinking about things like central banks, but also in thinking of evidencing the reserves of a stablecoin issuer. Who is going to be allowed to issue stablecoins? Custody has some unique concerns. Custody is a real thing in the traditional financial market space, of course, with its own idiosyncrasies, but custody with digital assets has different and sometimes related risks. So who will be allowed to be a custodian? What does that mean in terms of protecting the assets? What are the unique terms? And finally, some market participants in digital assets are actually large enough that they're starting to do transactions in traditional financial markets that will push them over certain limits and cause them to need to register as swap dealers. That will bring them directly under traditional financial regulation and introduce a whole set of obligations that they may or may not be prepared for. These are all interesting areas for us, and we want to get involved in helping people deal with the evolving regulatory space. We think that our existing client base, large financial institutions, are still going to be cautious in entering the digital asset space in 2023, but that once there is regulatory clarity, there will be deeper penetration from them. And we have clear and ongoing engagement, the divisions of those institutions that are exploring the space. This is just a sample of some of the global digital assets regulation and guidance. So it's meant to show that there is a lot going on. Again, this is just US, Europe, UK, Singapore, obviously lots of regulatory action in many other countries as well. So I'd like to wind up the presentation by talking a little bit about DeFi. So DeFi poses, I think, a unique challenge, but also has unique benefits. So just to think about this from a very high level of abstraction, DeFi market characteristics, what do they look like? You have market participants being matched algorithmically, executing via smart contract. Instead of a centralized participant, you have what is essentially a software protocol and an API. The market is dominated by a handful of such protocols, but there are always new ones that are seeking to create new marketplaces and new means of exchange. There are some very interesting characteristics vis-a-vis central exchanges. One of them is transparency into exactly how an order is executed and visibility into the nature of the marketplace. It is very democratic. It's easy to connect to this infrastructure. It's easy to build applications on top of it. There are many of them that have the characteristics of instantaneous settlement, which is something rarely observed in traditional exchanges. So a lot going for it. On the other hand, there is a significant amount of regulatory risk. So the lack of central intermediating legal entities causes regulators to ask a lot of questions. Is regulation unfriendly because it's not clear who is responsible for regulatory compliance or what the jurisdictional nexus would be? There are many legal theories about this, and different regulators are applying different versions of those theories. It's also clear that software developers are not necessarily immune from regulatory enforcement. So something will need to change in this space for regulators to become more comfortable with it. I think that many of the existing efforts may be missing the point somewhat, in the sense that a lot of the efforts to make DeFi more palatable to regulators have explored the creation of what I would term walled gardens to allow trusted participants access to these pools of liquidity. However, what that ends up creating, this central gatekeeping, is a recreated centralized entity where it starts looking an awful lot like an exchange again, which defeats some of the purpose of DeFi. So what might a framework look like, a conceptual architecture, if you will, that would facilitate decentralized compliance? I think such an architecture would need to take into account the realities of execution in this space. So you have a smart contract, it observes facts in the world and is able to write certain facts on chain. Some of those facts are going to come to it through oracles. I envision a compliance oracle, where that compliance oracle can take facts that are provided by the protocol about the situation, the nature of the transaction, facts about the participants that may involve some form of identity exchange, can call out to a service that can provide evidence of compliance with a set of regulations. And then that will give the protocol enough information to be able to write a verifiable proof of compliance on chain. I think that this is a very interesting approach. I think that there's a number of different directions that could take. And I think that this is a pretty good place for me to end my presentation and open this up for questions. So with that, I will stop the screen share and we can flip this back over to take some questions. Thank you.
Fantastic. Well, thank you to Brock for this very insightful presentation on Droit. And we really appreciate you sharing your insights and making a really engaging and meaningful point on the role of this emerging technology for what you are doing. We really look forward to learning more about your progress, and I'm going to take questions now, where there are quite a few. So the first one I'm going to start with will be, how would you compare the current regulatory landscape to the TradFi regulatory ecosystem, and what would you believe is most similar?
I think it's very clear that tax law, AML, KYC regulations very much apply in analogous ways in the digital asset space to how they apply in TradFi. And I think that for almost everything else, there's a huge amount of ambiguity and there's open space. Whereas there are very defined mechanisms that transaction reporting works in TradFi, and that credit risk is warehoused and managed in TradFi. These things don't exist analogously in the digital asset space. I think that custody is starting to evolve and look more similar, but again, regulatory progress hasn't kept pace with, I think, the movement and speed of market participants there.
Right. Very insightful. And moving on to the next question, which is, with an ever-changing global landscape around regulation, how is Droit able to keep tabs on the regulatory movements, probably regulatory trends, And how can institutions do the same?
Good question. So we benefit obviously from having a pretty broad base of big sophisticated institutions who employ lots of specialists in regulation, and then we talk to them, right? And there are various forms of engagement that we've created to do so. But I think very importantly, from a mechanical starting point, you define the regulatory space that you're interested in, who the various legal participants are who are actually responsible for rulemaking. You can observe that rulemaking, and then you can analyze the nature of the changes and the updates for relevance. And this is something that we do every time we productize something, we say, okay, what is the universe of sources that need to be observed for this, right? Who do we need to talk to? What do we observe? We build infrastructure that actually monitors that. We detect the change. There are parts of that that can be automated, but parts of that simply require review by people who can understand the nature of that change and the implications of that to an executable model. So what people can do today, I think that it starts with a kind of horizon scanning service. Now, a lot of law firms provide some sort of service where they digest changes in a space, they describe those changes, and they are very valuable in an evolving space. They may indeed have connections with various governments. There are industry bodies that people participate in, right, to understand the way the regulators are thinking about things, to help have a voice as some of the technical details are outlined. But the reality is, it depends on the regulation and the stage of development. So when something is very new, you need to cast a wide net, and you need to get some help in horizon scanning that, right?
And community discussions, forums like GBBC, where we have policy conversations and regulatory forums. But it's a way you have to stay connected.
That's right.
Your point.
Right. Yeah. So I think I'll stop there.
Yeah. Yeah. Thank you. What are the challenges with compliant decision making, and what types of risks or inefficiencies have been identified through this process?
So the challenges are in providing an interpretation that people agree with. Now, there's just some clear intent expressed in terms of the way that regulations are written, and there's a bit of a skill and a practice to codifying that. But there's always interpretive ambiguity. So when we distribute a model to our clients, their legal and compliance actually reviews that model and signs off on the interpretation as being fit for purpose for them. So it is possible to have a difference of opinion, right, from a market consensus on a particular component of regulation, particularly one that is evolving and changing rapidly. That's something that I didn't speak to in the presentation, but we do actually accommodate. We can have a custom interpretive view or change a piece of that logic for a client. What we've often found is we will do that for a client, and then they will reconverge to consensus later on, or the consensus will actually match that client's kind of leading edge interpretation, and other people will move to it. So those are some of the challenges. The risks that are attendant to it, I mean, there's the same risks of, looking at things the wrong way as there are for any sort of systematic attempt to solve a problem. I would say that having good data is important, right? Mm-hmm. Because in any decision process,
all about the data.
Garbage in is going to lead to
garbage in, garbage out. Yeah. Quality data. Very much with you. Hence the value of the blockchain and validation, and exactly some of the things that you're doing. Well, it's really great to have you as part of our community. Enjoying this conversation. Are there existing regulations for digital assets that you found to be the most valuable, and potentially commentaries, I would say, and also, are there any that have caused more complexities than simple solutions? And what's the value also of discussions on this?
So, like I said, I think that this space is evolving very, very rapidly. So let me talk a little bit to the boundaries of I'm just going to pick one example area of regulation. So if you look at MiCA, right, the European regulation that is going through this sort of multiple levels of refinement and technical analysis, et cetera. There are statements there that talk about things at an extremely high level of abstraction. So talking about various thresholds, right, that define a large participant versus a small participant. They talk about transparency and reporting, but then leave the actual pragmatic interpretation of some of those things completely unwritten. So when thinking about this type of evolving space, I have to look at the regulators and what they do in other spaces and the way they think about it. And so you can imagine that when ESMA or the ECB is looking at adding levels of detail in this space, they're going to take a lot of guidance from what they've done with MiFID, MiFIR, and EMIR, right? And those principles and what they're trying to get out of them are going to be the end goal principles of what they're trying to get out of this legislation. So, you know, when you are used to using a hammer, lots of things look like nails. And to the extent that in this space, there are some real idiosyncrasies that differ from TradFi, I think it's important for market participants to have a voice and engage with those regulators. And I think that they're open to listening to being informed by what people see in this space.
Absolutely. Absolutely. I will say also, GBBC has a weekly reg newsletter where we lay out a lot of the latest developments all over the world, because it is a work in progress and because it's in development. As you say, a lot of issues to be taken into account for compliant decision making. Moving on to the next question, what is the Adept platform and how do current users leverage Adept for their business needs?
So the platform is really those three components that I discussed. You have this annotator digital library, you have a logic viewer, you have a decision engine, and they're all driven from file representations of the underlying digital text and the logic, right? Now, how people consume that and how they use it. So people tend to simply integrate that directly into their existing application flow. So if you have someone who is operating a interest rate derivatives trading desk, they will integrate the Adept decision-making into their pre-trade workflow or their electronic quote infrastructure. You would have a transaction reporting layer post-trade also plug into that. And then they would use a consistent audit store for where they want to save those records. They would install the logic viewer, they would install the annotator, and they would be able to open up those individual audit records, again, integrated into their own operational workflow. So, I mean, we're evolving the platform to make it easier for people to have a more turnkey solution so that we can host some of these services for people. We often find, though, that banks have very stringent requirements on the data flow that leaves their infrastructure, right? So we support more of a hybrid cloud-based model for how that works as well. I hope that answers the Adept question.
Absolutely. What should market participants do overall to prepare, or how should they prioritize in terms of adhering to regulations? You partly already answered that. Is there anything you'd like to add?
I think that you have to prioritize adhering to all the regulations that have been specified. And obviously, the most important, highest profile efforts are the ones where there are clear avenues for short-term enforcement, right? So if you look at the TradFi space, there's a lot of stuff that happens pre-trade. It took regulators some time to sort of move into the pre-trade enforcement space from the transaction reporting space, where that was really their first focus.
Yeah.
Transaction reporting, making sure that risks are disclosed and that these sorts of things are applied, and then moving more into the expanded pre-trade space. I think that it's hard to say where the first points of focus are going to be for digital assets. So I think you're going to have to take seriously all of the final rulemakings that regulators put out, that you might fall under their scope.
Mm-hmm. Now, in terms of, someone asked, in the absence of consensus regulation for this space, how do you see Droit working with internal policies in conjunction with the actual law? Also, this is a highly volatile asset class. And how do you see position monitoring in relation to market events as something in Droit's future?
Yeah. So position monitoring takes place at a kind of an aggregated level, right? By its definition, right? You're looking at a net position or a gross position that you have in a particular defined thing, like a security, or you could say a particular digital asset type. So we are in the business of having the brain, if you will, right? The decision-making process. We don't dictate the infrastructure that people use to do sort of dynamic risk management, nor are we trying to provide a holistic all-you-can-eat solution. I guess what I'm saying there is when you think about these sorts of requirements, there are definitely going to be performance requirements, and then there's going to be a stage at which you would apply it. Policy, in many cases, internal policy, relates to two things. It relates to the fact that there's idiosyncratic data that drives specific decisions that is, that is particular to an institution, the structure of that data and how they want to hold it. So even something as fairly observable as sanctions, right? There are defined OFAC lists, but then there are principles that people apply, and then there's different sort of breadth with which people cast nets, and there's policies about how people do AML KYC. There's this concept of perpetual KYC. There's the concept of doing this for an individual versus an institution. These are not black letter law in all cases. Many of these are principles based, and the policies are actually quite important. So when we look at solving something for a client, we look at their internal policy, we can plug into data drivers for some of those policies, and we can literally provide attribution back to a policy that you've written as a Word document to apply in a certain circumstance, so that you can get a traceable decision and you can see where in that document that came from. But it's, there's a bit of an art to it, right? And over time, as you have standardized interpretations, it becomes more and more codified, and there's less and less scope for internal policy to deviate from market practice. But when you first start in these areas, there's probably going to be a significant amount of dispersion.
That is amazing. Next question is, assuming regulators will be equipped with enforcement tools to oversee the innings of DeFi operations, how do you expect DeFi participants' reactions will be? You mentioned the challenges, you mentioned the risks. Where do you stand with respect to that?
Well, where I stand is I think that there's a real streak of ideology in many of the people who have created DeFi protocols about enabling marketplaces that are not subject to certain forms of control and allowing people to transact in these spaces free from the strictures of particular localities. Mm-hmm. I think that the reality is that that vision doesn't have a long tenure for financial markets, right? I think that regulators have been pretty clear that they don't see that as being the end state.
Yeah.
So I think that the reality is things like money laundering, sanctions will have to be incorporated. There will have to be some form of identity exchange.
We need something.
Something will be required here so that the interface points between a DeFi network and the real financial system will actually allow money to move back and forth. Otherwise, I don't think that those two things can be coupled.
On the other side, in a way, on the flip side, another question related to DeFi, what would you recommend for organizations that are trying to get into DeFi and can be deterred by the current regulatory landscape?
I think you have to be very careful. So organizations that are trying to get into DeFi, meaning trying to create protocols, is that the nature of the question?
Somehow, it's not specified in the question, but from information, especially I will draw on GDF, came up with a DeFi report, and a lot of the statistics that they looked at showed that actually a lot of the DeFi participants, on the most part, are institutionals or professional investors that are seeking alpha. Yep. Or some form of investment opportunity. And that's regulatory landscape is very important to them. I would assume on that end.
So there are a couple of ways that could go, right? So in the TradFi space, there's this concept of brokers, right? And brokers tend to have a marketplace of vetted professional trading institutions, and they facilitate trading between those institutions. And you could imagine that one way that DeFi could go is down that path, where the only people who are allowed to participate in some of those markets are these very sophisticated institutions that all know each other and are all known to regulators, and everyone is comfortable with that space. And because they don't interact with people outside that space within that defined boundary, it's not a concern. That's definitely one way that DeFi can continue to operate. But DeFi where retail or someone, off the street or a casually engaged market participant can use a protocol and can interact, which again, I would argue is actually part of the point of DeFi is allowing this sort of thing.
The retail.
Yeah. There will need to be some means of knowing who that person is and for them to plausibly provide a proof of who they are. And the reality is you can't do KYC on the fly, right? Mm-hmm. So KYC has to have been done by someone before that point. But I don't think it necessarily needs to happen at a central gating point. I do think that there are opportunities in this space for being able to represent that and facilitate that. And if I were looking to build a DeFi protocol, I would say that taking these things into account out of the gate is a really interesting market opportunity.
Mm-hmm. I would agree. Moving on to talking about your API, is there transparency in the code of your API? As smart contracts are looking for that at this moment, it would be interesting to know if you are looking forward toward that.
The short answer is yes. There's complete transparency in the decision model, as in you literally see a visual depiction and you can see exactly what is applied at each step of it. You could take that and you could literally generate a function in whatever arbitrary language you would like that would represent the same thing. The whole point of doing it visually is so that people who are business users or who are subject matter experts, but not necessarily developers, can engage with it at all levels of detail. And now in terms of the actual API that we're exposing, it's a very straightforward, documented, stateless JSON-based API. What is not fully specified at point of execution is the nature of the data model based on the particular regulations that you evaluate, because that changes dynamically. But right. But yes, it's intentionally designed to be built in as transparent and open a model as possible.
And in terms of your clients, do you work with SMEs, small, early stage startups?
So our current client base right now is large sell side participants, both what you would consider tier 1 dealers and tier 2 dealers, ranging also into the asset management space where we work with large asset managers. We don't today have clients that are that size, but we intend to move into those markets probably towards the tail end of this year to be able to engage with and support more clients of a smaller size at, quite frankly, a more competitive price for that market segment.
And finally, what are Droit's major milestone goals for 2023 and 2024? And if you want, beyond.
So that's a very open question. So in terms of let me just let me partition this into two pieces. One piece is what are our goals within digital assets, and the other is what are our goals in general. So in general, we are trying to continue to make our platform as easy as possible for us to generate a knowledge model and instantly have something in production with our clients, right? And whatever we can do to keep decreasing that cost and increasing the cadence of the turnover of that, we're investing in technology infrastructure for it. We are also developing new products in the TradFi space. We're building out our existing product base, and we're exploring a number of different avenues. So you'll see more products from us this year and more things publicly announced. In the digital asset space, we are continuing to engage with our existing clients as regulations develop, and we're looking to see what problems we can solve for them absent regulatory clarity at present. We're also engaging with market participants who are in the midst of it right now, and trying to help them understand how they could actually take their policies that they have, codify them, and have something that's much more systematic that they could show to regulators. So we don't think, given the pace of regulation for this year, that there's going to be completely defined regulatory space, right? So we see this as being a year of engagement, exploration, and sort of proving out product market fit, but also making sure that people understand what is possible to do, and that you don't necessarily need to become a bank in order to have infrastructure like one.
Exactly. And what you're doing is especially significant today, as we've seen increased regulatory activity, enforcement actions related to digital assets, and overall regimes that organizations and companies are going to have to adhere to for consumer and investor protections. The importance of governance is key. And we're seeing consistently travel rule, MiCA, and other regimes around the world. So it's a very exciting journey that you're in. I will say thank you to Brock Arnason and Droit for joining us today for a thoughtful and very engaging presentation and Q&A on this topic of regulation for digital assets in the context of traditional finance, which is where we have the existing infrastructure in many ways to rely on. We really look forward to learning more about your progress. A recording of the presentation will be circulated to all those who registered, and it will also be shared publicly on GBBC's YouTube channel. And again, thank you so much, and enjoy the rest of your day.
Thank you.